Hello guys, how you all doing? I'm good myself, and yeah, I got this comment yesterday in the morning, I think, and then I promised this guy that I'm going to answer it with a video because I think the question that he asked here, even though I might have touched on it in my previous videos, but I'm going to answer it here. So make sure that you stay with me until the end because I'll be giving you tips as to like how and when to move your stop loss to break even, and like it's sort of like what is it that you need to wait for before you can move your stop loss to break even. So that's going to be the topic of today. So if you are new here, make sure that you do check out even the other videos that I made in the past in the very same order that I posted them, and you'll see they are very helpful. They're going to be very helpful. And again, as per your requests, guys, I've decided to start that mentorship program where I'm only focusing on, I don't want a big group, so I'll only take 7 people and teach them for a 2 months, 2 months, where we're going to do group classes. We're going to have like group lessons, we're going to have one-on-one lessons, we're going to have like, going to give you tasks, and then we're going to do analysis together. And then after 2 months, it doesn't mean that it's done, we don't have contacts. I will still be in contact with you guys, but I'm pretty much sure that by 2 months, if you put in the effort, you should be able to do the stuff by yourself. But if you come across maybe a situation where you're confused, you can always come back to me and ask me again. But remember, I won't be doing those. We'll be done with our lessons, but I'll still be there to assist you where you need clarity on anything. But as like I can promise you that 2 months is more than enough. So let's get started. So if you're interested, you just leave a comment. So let's just get started. So the guy is asking me, speaking of moving stop losses, my guy, when is the appropriate time or accurate situation to move your stop loss to break even, or move it to a position where you will lock enough profits, especially when trading on higher time frames? I'm sure I'm not alone in this. As a beginner, I'm quick to move my stop losses to break even only to be taken out by the market and have it continue in the planned direction. And after it took me out, even though I didn't make a loss, I'll be afraid to enter again. Hey, matata wa mangata. Your problems are many. So this is what you need to do, man. This is what you need to do. You need to be, before you enter, just always hope, look, expect the worst. Always expect the worst. When you're taking a trade, expect the worst. Pretend like you already lost that trade. Then in that way, you'll be able to try and limit your emotions when you're trading. You won't even feel it, because now if if you're only focusing on the positive side, the day you take a loss, you're not going to cope. You'll be sick the whole day. So always when you take a trade, pretend like it's a loss. So if you pretend like that, at least you'll be able to say, okay, what if I lose this trade? Will I still be in a position where I have enough money to still, my left in the account for me to still, look for trades again and continue and recover the loss that I made? If you approach the markets like that, so even how you move your stop losses to break even, it won't be because you of fear, because the way you're doing it, saying it's too quick, it's like it's fear. It's fear because you're scared to lose. So just pretend like you have lost already. Then you'll be able to put your emotions aside and let the market play out. If it respects your setup, it will respect your setup. You're going to hit your TP. If it doesn't, it doesn't. It's not the end of the world. You just got the analysis wrong. That's fine. That's normal. I also get that thing wrong. But the important thing is for you not to risk all your account. If you over risk, obviously you're going to be, the emotions are going to be all over. It moves small by a small amount of pips, already you're at break even. But why? Because you used the lot size that you're not supposed to use for your account size. So let me show you how you're supposed to move your stop loss. I think I touched on this, but it's fine. Let me do it again. Let's give an example with the same VIX 75 trade that I took, where we took a buy, right? Let's say the price is coming down. It's coming down and it hit, maybe let's say you're trading daily and H4. Those are the time frames on a sequence, the ones that you are trading, right? And then you are looking at H4 chart. It looks like this, it looks like this, it looks like this, and then it hits a bigger daily support. It hits the bigger daily support, and then you see the price reversing, breaking your breaking your bearish trend line and breaking your area of resistance. You can see went above that, it broke that, right? Now you can say, oh, I'm looking to take trades to the upside because the price is at my higher time frame area of support, and it went up and violated the bearish structures on my smallest time frame. Remember, when you're saying smallest time frame, we don't necessarily mean M1 or M5. No, I mean, remember I said when you're trading, you need to pick your time frames. When I say in smaller time frame, we are referring to this guy because we said when are your time frames, you're trading daily and H4. So it means H4 is your smallest time frame. So here you're saying the price hit my higher time frame, which is this area of support, and then it went up and violated the bearish structures on my smaller time frame. We're referring to the one on my time frame sequence. So now I'm looking for trades in the upside to join that new train, right? Let's say after doing that, remember the price doesn't, I always tell you, the price doesn't move like this. It can do that, yes, if there's the momentum is just too strong, but usually it will move like this. Usually it will move like this, but overall it will be moving to the upside, right? So which is why you must always wait for the price to show you what it wants to do, then you join that movement. You don't pretend, you don't predict what it should do. Let it show you what it wants to do, then you join it. So you are trying to buy, because I can't just say now it broke the resistance, it broke all of that, now I can buy. If I'm buying here, where am I going to put the stop loss? If I put it here, does it make sense where I put it? Because I just put it in the middle of nowhere. If I'm trading the area that makes sense where I should put the thing, the break, my stop loss, it has to be lower than this low. It has to be somewhere, then it's too much. I can't put it there, which means I can't enter there. It's not the right time for me to enter. I need to wait for the price to give me sort of a discount. So let's say there's a, remember obviously there's an area of support here. This is H4 support inside daily support, right? And this H4 support is the one that gave you the move up and broke the trend line, and it broke the resistance, which means that support on H4, and again it is inside a higher time frame support. That H4 support has got, it ticks all the boxes for you to trade it. So now, no, let's just put it, now the price comes back and you get your entry. You decide to go with the buy limit like I did on the VIX trade, and you get your entry. Remember, there are those minimum requirements that you said you need for you to take a trade from a certain level. We said the level must give us at least 2:1 risk to reward, meaning the movement from the zone, from this zone right here to where it turned before coming to trigger me, this space must be double in terms of the size. It must be double this, so that I know that where I'm going to place my TP1, at least if I was risking $100, at least I must be willing, I can't risk $100 to make $100. I need to risk 100 to make double, to make 200. So which means whatever that I'm risking, I must be willing, I must be risking that to get at least double what that size. So that's the minimum requirement, to say that zone must give us weight formed, which is here. It must give us double before coming back. That's the minimum requirement. And again, we remember we are saying, when we're saying after the zone is formed, and then we have a nice, let's say nice candlestick to the upside, and we have more than double, right? The next candlestick mustn't come back, because it will cancel what that candlestick did. So when the bullish candlestick moves up like that, it means the bulls are very strong. That's why when they're coming back here, we give them a second chance to carry on going up. But if the bears, after that one closes, the bears come back like that, we're not gonna do that. So that's also the things that you need to look out for. So let's say it ticks all the boxes, and then it moves up like this, it gives you candlesticks there, and then it gives you 2:1. Now it's only a matter of saying I'm taking the trade, because of what, it meets all the requirements that I want from it for me to trade it. Then you decide to buy from that, right? When you're buying from this, and then you put your stop loss, as you're buying there, you put your stop loss below the zone, and the target number one, it's here where it turned, which is at least two times the risk, right? So the only time you are allowed to move your thing, your stop loss, to break even, which is what makes sense, Because remember, you don't want to move it, but it can be a good thing, it can be a negative thing. Because remember, you can take long to move your stop loss to break even, and then the price reverses and hits your stop loss, of which you saw it was in the positive side, but you didn't move it to break even. Or you can be too quick to move it to break even, only for it to touch your stop loss before going up, to hit your break even before going up. So you need to just give it a decent amount of time and space for it to play out, so that you can tell if your setup was accurate, if it was correct or not. So the only time you are allowed to touch your stop loss is when the price has moved up and it has went to, let's just start afresh. So it did this, and then we have 2:1, and then we are buying here, and then we are buying here, and then we are saying this is at least double that, and then we are buying. So the only time when the price moves up, it moves up, it moves up, it moves up. If let's say this is a 3.5 times what we having here, so if let's say here, this is where it's double, so this is exactly double. So it's 1, 2, maybe 3, and 3.5, right? So the only time you're allowed to touch your stop loss is when the price has moved at least double. So meaning when the price gets to this, because remember, when it's double, that's where you most probably gonna have your TP1, and then after hitting the TP1, you can decide to close half your trade and then leave the remaining trade stop loss where it is, or you can close half and take the remaining trade to break even. So the only time you're supposed to move your stop loss to break even is when, sorry about that, it's when the thing has moved double. So if it hasn't moved double, why would I move the stop loss if the price has only triggered my thing and then it's still playing around here? It's fear, my guy. It's fear. That's why you just be like, oh, what if it turns? What if this? If it turns, it turns. Let it turn. It means your setup was wrong. What if it doesn't turn? You see? Let it play out. It will correct you if you are wrong. Don't fight against your emotions. Let just be there and say, if I take a loss, I take a loss. I know I did my calculations. I know already that if I take a loss, this is how much I'm going to lose. So let me just leave it there and then let it play out. The day it gets to double that, then I can close half and then move the remaining to break even. And then after doing that, now it's only a matter of managing the remaining half or managing the remaining trade so that it moves in the thing. It moves in the right direction. Because remember, we can have this. So it's only just after moving to break even. It does not mean that you are done. You still need to manage the remaining trade. So remember, when it's going up, okay, it came back, it triggered you 2:1, you close your half and whatnot. So if it does this, it means now what do you have? You now have a trend line in the opposite direction. So when it does this, so how you are managing the remaining trade, you always move your stop loss below this and then below that, and then it's moving. You always move it up. Why? Because you want to say, for the price to reach my stop loss, it will have to break the trend line, or maybe break the area of support as well. So if it breaks the trend line or that area of support and touch my stop loss, it means, okay, fine, I accumulated enough money, now I'm done. I can't force the trade. I can't be putting my stop loss there. Why? Because the price will be coming back. If it's here, why are you still holding that buy trade? And if this is your H4 and you're trading H4 and your H4 is no longer going up, why are you still holding that trade? So that's why if it hits me here, then it means it's no longer going up. It must take my bullish trade out. So that's how you manage your trade. But you are not supposed to touch your stop loss until it moves double. Then when it has moved double, you can close half and then keep the remaining half at break even, and then you're going to manage it like this. As the price is moving, you manage it like this, you manage it like that until you hit your TP at the top, or until it comes out and take your trade out. So that's how you manage your trade. That's how you move your stop loss. So you need to remove, the difficult part of trading. Some people, they know how to analyze, but they're struggling with controlling their emotions. So they feel like if they lose a trade, now is the end of the world. No, don't approach the markets like that. It's okay for the market to hit your stop loss. It's okay. It's normal. What you need to do is that the price, when it hits that stop loss, it does not take out the whole amount in your thing, in your account. So that means you'll still be able to trade and get your money back. That's it. and don't rush moving the stop loss to break even. So if you are using the right lot size for your account, putting your stop losses at the right places, not over risking, not over trading, then you'll see that you will be able to control your emotions and give the market enough time for it to play around before you move your stop loss to break even. In that way, you see, you won't struggle a lot. You won't struggle a lot. So emotions, deal with that, then you'll be fine. There's no use in you analyzing and then moving the stop loss too quickly. So that's not gonna help you, because the price can just touch that stop loss before taking off, and then you'll have yourself to blame. All right, that's it, guys. I'm gonna end it like that, and I hope it was helpful, Mr. SK. I hope it was helpful, and then now you'll start doing the right thing. And for those ones who are interested in the program, the paid membership program, I'll release the details later. But so far, those ones that are interested, that I've been saying they're interested, they want to join, I've been taking their names down, and then once the list gets to 7, we are almost there. Once the list gets to 7, then I'll make sure that we do all that is required, and then I'm busy preparing teaching lessons and like a lesson plan. But I'm telling you, 2 months is a lot of time. 2 months is a lot of time for you to grasp everything that I have for you, and you'll be able to ask questions, interact with me on a one-on-one basis or in a group, so that we help each other. We help so that everyone is on the same page. Because if I take a big group, then it's gonna be useless for you guys. You won't get the value for your money. You see. So I want to make sure that everyone, whoever that I see that they're slacking, they're not pulling up their socks, I be like, hey, you can see what others are doing. So if you're still new here, then I'll pump you maybe with extra lessons. But I'm hoping that everyone will be on the same level as in terms of that eagerness to learn. Then I'm going to make sure that at the end of the 2 months they are able to confidently analyze, chart, and come up with a good setup. So that's something that is an investment for life. Then from here, it's just gonna be too, like, the amount that I'm gonna charge them. It won't be a lot compared to how much you stand to make for the rest of your life. Because I don't want signals. I don't want signals. Never pay anyone for signals, guys. Don't pay for signals, because you can blow your account without even knowing how you blew the account. Why? Because you don't know why you bought. They say buy, but you don't know why you bought. One. So rather pay someone that you know that they can analyze. You've seen them analyze, so that you know that, oh, if they have seen them analyze, and then this is how they analyze. I like the way they are trading, their style of trading. Then you know that they are going to teach you exactly that. And then the signals, you come up with your own signals. Because honestly, there's nothing as stupid as blowing an account because someone else said buy. You're blowing your own money. No guys, learn how to trade. All right, I'll see you guys in the next one. Sharp sharp.